What kind of world do I want to live in? I think about this question a lot.
For our generation and for specifically my group of people, which is refugees, the circumstances might dismantle any vision of the future that we have.
You're trying to rebuild, you're trying to make a future for yourself, and then the climate-related disaster comes and you start again. It's not about how it's affecting you now, it's about how it's affecting you your entire life.
First step to understand is that we're all a part of it. None of us are going to be left out by the crisis.
We're at a stage where if we don't act now, really there won't be very much left.
There are generations that will never see certain things that we grew up seeing in real life.
We have to start treating this like the emergency it is. To achieve the 17 Sustainable Development Goals, we have to go from an intention to a serious commitment.
Business leaders really need to rethink how they conduct their business and invest in creating systems that are climate friendly.
The action I would like to see is accountability. Structures being put in place where countries aren't just asked to do something, but they're kept accountable to the decisions that they make.
There has to be that strong collaboration between government, between corporations, between youth activists to drive change forward.
The world I would want to live in is a world where imagining the future is not a privilege.
I want to live in a world where people do not give up on hope that a positive change is possible.
The fact that you're listening today means that you are willing to make a change.
Welcome, everybody. Good morning, good afternoon, good evening, wherever you're joining us from. My name is Justin Adams. I co-lead our nature-based solutions work at the World Economic Forum. It's my great delight to be leading this issue briefing this afternoon about unlocking carbon markets. And carbon markets right now are really hot. There isn't a week that goes by without new announcements from corporates, from governments, and stories that are in the press. But it's also no exaggeration to say that there are a few more polarizing and contentious topics in the environment movement right now than carbon markets. So a couple of quick thoughts to set the scene. We've seen this dramatic increase in corporate interest, corporate investment. Ecosystem Marketplace published a report just last week highlighting that the voluntary markets, so corporate investment, has reached almost $750 million, and they expect it to top $1 billion in the year ahead. Back in January, we at the Davos Agenda Week hosted Mark Carney's launch of the task force for scaling these voluntary carbon markets. And just this week, just a couple of days ago, they've announced a stellar new advisory board. Carbon markets are also a perennial flashpoint in the formal UN negotiations due to kick off in the next round to kick off again in a few weeks in Glasgow. But many activists fear that governments will try to dilute ambition by using carbon markets and the provisions of what's called Article 6 in the Paris Agreement to try and reduce overall ambition. So there's lots of buzzwords, and I'm sure we'll touch on a few of them, but I just want to drill it down to, in essence, what carbon markets are for those of you who may be looking at this issue for the first time. And at the simplest level, carbon markets are where if you have overcommitted or overachieved on your climate commitments, you can sell excess carbon credits to somebody, another entity, a polluting entity or a country that is looking to try and increase their own ambition, but not able to decarbonize quickly enough. We've got existing regulated markets in places like Europe with the European Emission Trading Scheme, in California, and these voluntary markets that we've already said that corporates are investing into. So the theory has always been that done right, these markets could actually lower the overall cost of achieving our climate ambition without diluting any of that ambition that we know is needed. So done right, we also know, and you'll hear from one of the panelists in particular today, that they could also be a crucial source of finance for critical issues like how do we stop deforestation by providing crucial incentives, crucial financial incentives for countries with tropical forests for how the forest can be more valuable standing rather than today where we see more value when it's cleared for agricultural production. So in theory, they can be a really great thing. But the challenge for the last 20 years, they have not fully delivered on the promise that they've always held out. And too often, there's both perception and reality that real reductions have not resulted from the use of these carbon markets and that they can be susceptible to greenwashing claims. So we've got a stellar panel now. And what we're going to do is unpack some of this to really think about what has worked, what hasn't worked, and what might we be able to hold on to as we go forward. So the three panelists, I'm delighted. We've got Rachel Kyte, the Dean of the Fletcher School from Tufts University in the US, Joaquim Levy, the Director of Economic Strategy and Market Relations from Banco Safra in Brazil, and Eron Bloomgarden, the Executive Director of Emergent. But all three of them have also got incredibly rich backgrounds and past. Joaquim as former CFO from the World Bank, former Minister of Finance and the President of the Brazilian Development Bank, Rachel heading up climate at the World Bank for many, many years, and Eron been involved in private markets for carbon. So great panel. I'm going to turn to you first, Rachel. Carbon markets, a crucial part of the solution or a dangerous distraction? And I'll turn to each of you with that same question.
Crucial part of the solution, and I think this race to zero that has really just exploded over the last 12 or 18 months, with corporate commitments coming in stronger and stronger around net zero, have brought real attention to the market in a way that we hadn't really seen before. I'm now the co-chair of the Voluntary Carbon Markets Initiative, and that's because the only way in which the carbon markets, voluntary and regulated, are a crucial part of the future is if they actually achieve the end purpose, which is to put us on a pathway to 1.5, to smooth the pathway to 1.5 degrees, and that they provide a sort of, that they are global and liquid, and they provide a source of revenue to the protection of the natural resources that we need, and to countries who are faced with extraordinary dilemmas in how to adapt and become resilient. So voluntary carbon markets only a part of the solution if they actually help us achieve those goals. So they have to have this purpose, which means that we need to have high integrity carbon markets. And I think that's where the drama and the disagreement lies. There's a complexity to building these markets, and they have to be high integrity, which means that a claim made by a company has to have credibility, has to be transparent, has to be assured and verified, and the actual performance of a country or of an asset, which could be then traded, also has to have integrity. So the Voluntary Carbon Markets Initiative is sort of established to, with this ethic of an end-to-end approach to integrity across the markets. Really what we're looking at doing is trying to, through a multi-stakeholder process, try to make sure that developing countries have access to these markets, because without that, credibility is difficult, and that the claims that are made by companies are ones which have integrity and can be verified. So we're going to be doing sort of the dirty skunk works that has to happen within any market when you build it up. So looking at the scope and purposes of claims, looking at transparency and accounting, we're going to be coming forward and putting forward sort of straw men or women for market participants to tear down. There's extraordinary innovation in the market, both on the supply side, and obviously Eron's going to talk about Leaf. I think there's also extraordinary potential for transparency using new data, big data technologies, using blockchain, using other ways to be transparent. So I think there's a huge potential to make this work for those twin goals of 1.5 degrees and global participation. But we're going to have to hold ourselves to account in order to be able to do that.
Very good. So, I mean, you talked about complexity, you've then talked clearly about integrity, and obviously the path to 1.5 degrees being crucial, but your answer, carbon markets, a crucial part of the solution. We're just going to have to get it right. So, Eron, let me turn to you. Crucial part of the solution or dangerous distraction?
Yeah, in my mind, absolutely crucial part of the solution, Justin. I've been involved in carbon markets for almost the last 20 years. And I think they are, if done right, as Rachel is suggesting, they are a crucial and need to be a crucial part of the solution. And so just looking at both, Rachel had mentioned the supply and demand side. And so just looking at both of those, what I'm really interested in is how do we protect nature? How do we protect standing nature and ecosystems? And when you think about how you can do that, ultimately, we're living in an economic system that we have, and people make decisions, government make decisions based on incentives. So to keep ecosystems in place, to keep forests standing, we need to find ways to change the economics on the ground to give them some value, non-extractive value. And one of the best ways to do that, having thought about this over the last 20 years, in my view at least, is to pay for ecosystem services coming out of those forests. There's water, there's biodiversity, but the one that's the biggest and that people are frankly globally willing to pay for is carbon. And so, in my view, one of the best hopes of keeping nature standing, keeping ecosystems intact, and forest standing is through payments from voluntary carbon markets. Then on the demand side, and that's also crucial. And this is where some of the criticism in Levy that companies are delaying action or not. We need to hold companies account. There's no doubt. Companies and buyers of carbon credits need to be doing everything they can within their own operations and within their own value chains. But let's face it, there are some companies in some sectors that just don't have an alternative. Unless we're all happy to stop flying, right? We have to hold those companies to account. And I think you'll find that the companies that are participating in voluntary carbon markets and purchasing carbon offsets, they're actually embedding a carbon price into their operations. We can't just let them off. We've got to say the emissions that you can't mitigate, you've got to cover one way or another, and offsets, and in my view, are one of the best ways. One of the best ways to do that.
Very good. So thank you, Eron. So you, again, talking very clearly there about using carbon finance or payment for ecosystem services to help conserve forests, a crucial source of finance, but this importance of getting the integrity of that right, both on the supply side. So what projects are we actually doing in the tropics and other forests ecosystems around the world? And we'll come back here more about that. And then similarly for the corporates, how do we ensure claims that they're making actually are part of their overall climate plan and not just some corporate greenwash? And I think we've got good examples of where they are doing that, but there are also examples where they're not doing that. So Joaquim, so much experience in this space, you've written about it, and in Brazil, right, is this a key part of the solution? Is this something that we should be really sort of piling in on and helping Brazil bring this forward, or is this a dangerous distraction in the Brazilian context?
No, this is very central to Brazil, and I think to many other countries. For two reasons. First, because it's a very important way to bring, say, the South in the discussion and opening economic opportunities in this fight to net zero. The second, which is related to that, is that in many cases, we don't have technologies yet. I don't think that by having carbon offsets, carbon credits, and supporting nature-based solutions that exist today, we are hindering the development of new technologies that we all look for. But the fact is that we have a number of ways to reduce emissions today, and in an inclusive way, not only in terms of countries, but also of populations within countries. And carbon credits can have a huge impact on that. Now, responding to supply, two things. First, integrity and transparency is fundamental. Second, you have to think about what kind of activities should be eligible. And I think that in addition to just conservation, which is very important because of all the service that Eron has mentioned, also things that change the economics, especially in the agriculture sector, are very important. So anything that creates incentive, for instance, to have a low emission agriculture, or to change the dynamics in meat production, all of these things, there are ways to stimulate new ways of doing things, for instance, intensifying cattle raising, that to free land to reforestation. These are good things that should be recognized. We need to have, say, clear guidelines and a framework to work with that. Also because one thing that I learned, now looking at the demand, one thing that I learned when I was issuing papers, data from the World Bank or from Brazil, is that corporations need things that are simple to understand, that are liquid, that people can recognize. So the same way that when you issue a simple debt, or even if it's a green bond or say result-linked bond, these things have to be easy to understand, verifiable, so that you really get a market and people can price it. So I think we have to continue to work on both sides, in the supply and demand, but we know broadly what you have to do. Increase the range of activities that can be covered, integrated these in the voluntary and mandatory market, and have this sort of standardization where you can really identify what a project that is, say, underlying a credit or whatever security is really bringing to our final goal, which is net zero.
Terrific. And the 1.5 degree pathway that Rachel talked to. So I mean, again, great examples of kind of how you can use it to incentivize, different sectors of the economy in that transition that we know is needed to net zero and to 1.5 degrees. But I want to turn now to each of you again with the same question. There's such a great idea. Why have we not seen more progress in the last 20 years? And what do we need to think about differently as this new wave of money comes in, as the new interest comes in, if we're going to avoid some of the mistakes that we've seen in the past? Rachel.
Well, I think that I think we'd need more than 30 minutes to discuss all the things that haven't happened over the last 20 years that could have happened and perhaps should have happened. But I think where we stand now is that we have huge distrust because you haven't seen the flow of finance and support and resources into the communities. You haven't seen a slowing down of the rate of destruction of forest and nature, and you've seen some outrageous and egregious greenwashing and outrageous and egregious claims, and some really quite absurd credits and so absurd that my dog agrees with me. So the issue is really now, how do we build credibility? And so we have to call out the greenwashing, and we have to recognize on the demand side that there is only a business case for a voluntary carbon market if it is high integrity. If it's not high integrity, then we don't actually have a voluntary carbon market that helps, and it won't help anybody. And then we have to assure access by developing countries into this carbon market so that it can provide the kind of financial flow. So I think we have to, and I think this is why the work that I'm doing, the work that the task force, which has got its new governance in place now, is so important, is that we actually have to form greater and greater agreement about the rules that we will operate within and how we will be transparent. So I think those are part of the reasons why it hasn't worked up to now, and that's what we need in order for it to work going forward. And I'm going to mute now.
Thank you, Rachel. Eron, let me come to you to build on that, exactly the same question.
Great. So I love this question. I would actually, maybe I'll be a bit of a contrarian here and say, I actually think that in many ways, carbon markets over the last 20 years have been a huge success. They lowered the cost tremendously of implementation and smoothed the transition of implementation of the EU ETS. China, which was a great beneficiary, was was frankly brought to the table in a much more meaningful way. Because they were recipient of CDM finance, And so we may not have seen the type of action we're seeing at the national level now with the carbon market in China. I could go on and on. I mean, I think, yes, there have been problems, but this is, there was frankly a learning by doing phase. In terms of also, I mean, I also think a few things. I think first of all, we do need to say on the greenwashing side, I think that Rachel raised, we do need to see more rigorous standards on buyer criteria. We've tried to implement that through Leaf. We'll talk more about, but and then on the supply side, I've spent the last 20 years investing in and developing probably about 30 carbon projects. And there's some great projects with great impacts. Two things. One is there have been a lot of great projects. There have been a few bad projects. And so there's a bit of a bad apple thing that kind of tarnishes the whole thing. My personal view is, we're in such an emergency, climate emergency right now, that it's time to think beyond projects, not abandon projects. We still need projects. But we need to move much faster and much larger scale. And way to do that, in my view, and this is the focus of Leaf and Emergent, is at the jurisdictional approach. Again, not abandoning projects, we got to do both, but we need to mobilize and connect carbon markets to this jurisdictional action as a way to aggregate and get to scale.
Very good. So we'll come back to that in the final round in a moment. But Joaquim, your thoughts on the progress or lack of progress, different views from Rachel and Eron there in the last 20 years.
Oh, look, I think the dynamics of carbon and decarbonization has changed dramatically in the last 3 or 4 years, since 2015. So you cannot compare what happened, say, the few years after Kyoto, where actually, as Eron said, there was a lot of things happening, but it was a learning process with low demand, with a new level of commitment of corporations, including corporations in countries that don't have, say, regulated carbon markets. So if you are an American company, how you deal with the environment? There is no framework for you, so you try your best. And I think Leaf is an example of people trying to band together to have something meaningful. And I would have a word on the so-called jurisdictional approach, which is, I mean, trust local governments in doing that. And what is the advantage is that project preparation is a real problem. It takes time and so on. So if you don't have some sort of a framework, sometimes provided by the local government, it's very difficult to have these. And then you may even have incentives for a sort of a lower integrity projects and so on, if things are done in a very unstructured way. So I think that with the increase in demand, with the sense that this will be something that has a time horizon, so it's not something that happens today, a flash and you disappear, you will start to get in place what are the typical things needed to build a market, to build an industry, which is a sort of, be able to foresee the future, to have some sort of framework where you can build. So also the responsibilities of the different actors are more well specified. And there are very encouraging examples of these happening, but certainly we need to accelerate that.
Very good. So we're going to go into a final round now, right? I think really fascinating what you each outlined there, that actually there's been a lot of learning the last 20 years. There's been some real progress, but we've also sort of fallen short in a number of areas. You talked about the trust issue, Rachel, and clearly the integrity issue sort of runs throughout this. As we head now to Glasgow, we've got 5 minutes to sort of try and bring this together. What are the things that are happening? And Eron, you've talked about Leaf, but you've each got examples of where there are signs of hope of how we're going to get to scale and how we're actually going to ensure the promise of carbon markets can finally deliver at the scale and the urgency of action that's so desperately needed, given all the science. So Rachel, to you first.
Yeah, so I think that there's been important work done this year, and that the UK presidency has been spurring. They will be the presidents for the year following on. I mean, the presidency is assumed just before the COP, right? So I think that Alok Sharma will look to continue to drive towards smooth operating, high integrity, voluntary carbon markets that then can scale. And so I think that there's progress being made by the task force. BCMI will be offering in the weeks after COP26 different guardrails and ways to think about integrity, and that we can start to sort of gather some critical mass around high performance. I think what you should see before COP26 is obviously continuing commitments by companies in a race to net zero, but I think that those companies that understand that that high integrity is the absolute sine qua non of a functioning voluntary carbon market for the goals of COP26. I think you'll start to see companies coming out saying, we understand that we have to be transparent and we have to meet the highest standards. So, you know, a claim in a voluntary carbon market has to come after a company can show how it's going to manage its transition, and that the voluntary carbon market is not just sort of laundering sort of carbon around, but we are actually in the process of trying to reduce emissions to meet 1.5. So I think you're going to see lots more announcements. You're also going to see, I think, pledges by developing countries to get their houses in order and to build the mechanisms that they need in order to be able to participate. UNDP will be doing a lot of work in that respect. So we're on a very tight time track, but I think there'll be things coming into view before COP26, but then after COP26, the voluntary carbon markets become a very big on-ramp. For some, hopefully, a successful Article 6 negotiation in Glasgow means that this is an on-ramp to regulated markets. But if the regulation is still out into the future, then voluntary carbon markets have got a role to play. And people like Emergent and Leaf are very, very important.
Great. So thank you. So Eron, let's go straight to you. We're running a little tight on time. Emergent, Leaf, how are you playing your part? What are you seeing in the run-up to Glasgow?
Yeah, and so one of the signs of hope, I think, and at Emergent, we're speaking to corporates, CSOs, and every day. And I think one of the things that is a sign of hope is that these corporates are really moving now. It's much different than it was 2 years ago. There's a lot of pressure on companies to act. They're starting to really build it into their core businesses, really understand what this means, and think deeply about how they engage in this. In terms of Emergent and Leaf, we launched Leaf in April at the White House Climate Summit. We announced a target of $1 billion, so 100 million tons at $10 per ton. So you'll hear progress about how, where we are towards that. But I would say beyond that, look, we know that Leaf, the $1 billion is way too small. I mean, it sounds like a lot. It's a headline, but this needs to be much bigger with 10x, 20x, and so. Leaf is really a platform for collective action, public, private, civil society action. And so, additional partnerships, other additional companies coming on, and certainly now starting to, highlight some of the jurisdictions that we're talking to. So that's what's coming for us.
Terrific. And it's great to see you yesterday, Boeing, PwC joining you, and then hopefully these announcements of real partnerships with states and provinces in the critical forest countries as well. So terrific. Joaquim, last thoughts from you in terms of what are we looking forward to? What gives you hope?
Okay, well, I have hope because we're seeing a lot of activities, including from the financial sector. I mean, banks, as well as asset managers, etc. They're putting together funds and other instruments so that you can channel a capital to forest areas, and also for those activities that I mentioned that can reduce emissions or even capture emissions efficient ways. And we are working in many cases together with institutions like TNC, WRI, and we could have a number of very good examples of things that have on their own already some, say, scale, but are also pilots of things that could really become, say, standards for these type of activities. Now, I would say that in addition to that, we have to integrate voluntary and regulated carbon markets, because otherwise pretty soon we're going to start to have questions about, say, a company does something and where it would count, will be in the headquarter country of the company, or you'll be in the place that these are happening, and so on and so forth. In this aspect, I think that the discussion of companies having dialogues with subnational governments sometimes can be very helpful for the reason I mentioned. Governments can provide frameworks, can provide an environment where a lot more things can happen in, say, more transparent and more monitored way. So a lot of things to do, but I think the last 18 months we made a lot of progress too.
Very, very good. So I want to thank all the panelists for a really engaging discussion. I think we could have probably gone double the time and still not touched all the issues, but hopefully that gives you a sense of the opportunity to unlock carbon markets. Certainly challenges ahead, but I think unanimity from this group that carbon markets will play a crucial role. Lots of lessons we can learn from the last 20 years of what's gone well, what's gone less well. And then as we move forward, some of the things we're hearing about, the innovation that's there, the financial sector getting involved, the partnerships that are going to be crucial, public-private, to actually make this work, the relationship between the voluntary market and where so many corporates are piling in, but then the necessity of regulatory markets as well. And then the crucial piece of the rule-based system to ensure that there is integrity, and the great work that the VCMI is doing, that Rachel is now co-chairing, the great work on integrity that LEAF is doing, working with the forest countries to ensure larger scale impact. And I think really an opportunity for, if we can get this right and work together, then this can play a really substantial part of climate action in the decade, this crucial decade ahead. So thank you all. Hopefully that's been an engaging session for you, the audience. Great panel. Thank you so much to each of you. And please enjoy the rest of the Sustainable Development Impact Summit in the next couple of days.